Welcome to the State of the Markets podcast. I'm Paul Rodriguez of ThinkTrading.com.
I'm Tim Price of PriceValuePartners.com.
And our very special returning guest is Jonathan Escott.
I think the eagle has landed.
Hello.
We're going to have to keep that in.
That's the creepiest answer on the pod.
I was walking by the swimming pool yesterday of the local club, and there's a big buff kind of gym coach I've seen for years. He's got all these tiny kids, about 5 or 6, and as soon as I've got to walk behind them, and he said, "Oh, kids, stand back. This guy's a bit of a creep."
Oh my God!
Nice.
He's just playing around. He's Polish, being his Polish humour, but then all these things can be like, "I am some genuine pervert." And my wife said, they might tell their dad.
Oh,
and it's going to become a thing that you're the gym perv. It's like, oh
no.
And on that bombshell, Jonathan Escott, welcome back to the show.
Hello.
Yeah.
You can't include that at the start.
Oh, we have to. It's comedy gold.
Okay. How are you keeping?
Yeah, not too bad. How's things with you?
Not bad. I mean, we had a nice summer. Went for a cycling holiday around Lake Constance. And I don't know why people don't go to holiday more in Austria or southern Germany.
Oh, it's
because
beautiful.
It's really pretty. There's no one there. At the end of August, the weather's 28, 30 every day. There's no tourists apart. I mean, I know I'm a tourist. I mean, I can't complain about other tourists, but it's not like if you go to Positano and those places, they're just jammed.
I am a seasoned global traveller. You are an adult. He is a tourist.
Yes, that's right. Anyway, so in the investing world, what have you guys been up to? Feeling quite
Paul, I'll let Paul take the lead on this one.
Because I have this horrible feeling at the moment. I hate trying to time gold because I don't think, apart from trend following, I'm not sure anybody has a good handle on it, because you seem to be able to find any period in history which can just disprove any theory you have of it. Well, Charles Morris has got that.
By tree.
Yeah, I think he's pretty good. But it seems to make a fool out of anyone trying to time it. Like in 2011, I remember everyone feeling very, very pleased themselves.
We got wrong-footed on gold in around, because that was the end of the cycle, effectively, wasn't it? That was the end of that bull run for quite a period. I suppose the thing that I get is, you look at something like the Incrementum research. If people who don't know them, Incrementum in Liechtenstein do arguably the most inclusive research on gold, and they come out with an annual report called In Gold We Trust, which is just like the industry standard. It's like the Bible for gold investors. And one thing you get from their data is gold's actually been a fairly consistent performer for roughly the last 24, 25 years. The annualized returns in just about every currency are getting on 8 to 10%. So there are very few periods when it hasn't actually done quite well, and that's just bullion, let alone some of the miners.
Yes, I mean, I've got on the miners versus gold thing. I remember a point that Peter Spiller runs Capital Gearing, and in 2005 or 6, I was talking to him when I was living in London, and I was talking about gold, and he had like a 1% or something in gold, and I was trying to tell him what's the point, because he worries about the same sort of macro things. I think we all do, but he leans heavily into linkers and a lower weight to equities than normal. And I was saying, why bother with gold if you're only at 1%? It's not going to move the needle. And we were just debating that. And I was at that time looking at gold miners, and he said, "Jonathan, don't get too clever." I said, "Don't be too clever." I said, "What do you mean? You have gold miners and all the stories about the cash flows and blah, 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 and the upside leverage." So he said, just having gold is enough of a call. If you're right, you'll be right enough. You don't need to overthink it. And that really hit me, actually. And I did fade the gold miners, and I thought, being in gold is enough of a bet without trying to be too clever.
The other thing that's somewhat problematic is that if you have we both as a business and as individuals within the company have fairly meaningful allocations to precious metals and to equity related to precious metals. And there's an existential sort of grim aspect to this, which is a world in which gold is doing really well, which it is now. It's not a world in which you really want to live.
Well, I think
because it used to be the case that there was this expression, bad for life, good for bonds. And I'm not sure that's necessarily holds true anymore, because the whole nature of the bond market has changed given the size of the sovereign debt load globally. But either way, a world in which gold is really doing well is an uncomfortable place to be, is all I'm saying.
Yeah. I mean, a question I have for you on this subject. I know it's your podcast, but I'm going to ask you questions now, because I heard
it's fine.
I heard Tim on a podcast the other day. I don't know who was interviewing you, but it was Who's the Mavericks one? Is that right? I think Mavericks.
I don't know how to pronounce his surname. I think it's either McEwen or McCown, but Jonathan McEwen.
Yeah,
in the Mavericks podcast anyway. Yeah, that's right.
And I have to say, in a non-patronizing way, you explain trend following really well, Tim. Like, because the problem is if you combine, let's say, being a value investor broadly defined, and then trend following, it's like, oh god, you're just colliding two worlds, and most people think it's too hard, too complicated. The value guy tends to be very old school. And they tend to be old-fashioned conservative people. And you then say, oh, no, I'm marrying it with a bit of trend following. Like, oh my God, you're now mixing some black box voodoo witchcraft into it. And they don't understand how they can combine really well. And Mev Faber, who runs a bunch of ETFs and has a sensible podcast. He was very good on the logic of combining value with trend following. But I worry about the reasons we're being told now for gold. When gold goes up, as usual, price moves, then everyone develops a narrative afterwards, and we're saying, well, Russia had all their money nicked by the Americans, and that's led every other maybe non-friendly American related country to start thinking, hang on, like I heard yesterday on the board meeting that India's been repatriating a lot of gold, and I'm not surprised. I mean, they're buying their energy from Russia, recycling it back into us.
And they're also huge. They're also huge investors in silver for sort of green reasons in India as well. There's apparently a solar park in Gujarat. Is it? There's twice as maybe 5 times the size of Paris. It's extraordinary.
But didn't you study history? Mind you, yours is medieval history, so maybe not.
No, I'm an English graduate.
Oh, I'm sorry.
Sorry, I'd have loved to have studied history, but.
Because do you not feel with a lot of what's happening with, let's say, Russia at the moment, you can almost imagine how the history books in 50 years are being written now. So you get an initial setup where you can say, okay, if there's a bad actor there, maybe we provoked him, maybe we didn't. Even if we did, should he have done this? And okay, so all that kind of carry on at the beginning. And then I remember there was a military leader writing in the Times saying you need to be able to visualize a likely end game before you start fighting. And he said, we're not doing that here. Like Russia has a reputation for not stopping. And there's lots of them. And he said, and they have a lot of World War II artillery. And this, and here we are. I saw in the paper yesterday, 50, 60,000 Russians have died, or sort of casualties, I should say, in the last 2 months. And you're thinking, fucking hell, this is one of those things where it's going to just keep on escalating now. We're selling missiles that go deep into Russian territory. And I don't have a clever answer. I'm not pretending I do.
I don't think I've ever experienced ever watched a war unfold where there's been effectively no apparent interest in having a peace settlement. There's nobody, with the possible exception of Donald Trump, seems interested in a settlement here, which is extraordinary.
Yeah, well, you can imagine. I doubt the listeners to your podcast will. I think they might be more subtle about this. But you can imagine your average person will be screaming, you can't, it's appeasement. We learned from Hitler, you can't just appease them. Russia will not stop. They'll take Lithuania next. Like, okay, well, would you just relax? Like, you forget how the situation Hitler and Germany were in the beginning of World War II is a completely different game. And you can still agree Putin's a bad man or bad actor in this case. But I think we're very bad at living in shades of grey and compromise. Sure. I think that's a major problem. Like, you see it with the woke ideology. There's just no room for nuance or subtlety unless it's their pet subject. When it's their interest, for example, the whole Israel thing. When you remember Harvard and Yale, where they found it quite confusing to see subtleties about negative views towards the Jews on campus, which was quite strange.
I think you've touched on an interesting point, which is that humanity really struggles with shades of grey. So I think nearly everybody, all of the time, would prefer to see black or white, but nothing in between. Which is probably also why we like narratives. So we like the certainty of a narrative over the uncertainty of doubt.
I wonder whether, because I've been talking to there's a local chap here, and he was a fund manager at KKR. Now he lives here, and actually going to be I'm going to suggest his book at the end of this show if you ask.
Sure.
But I don't understand why there are things that seem to be true, obviously true, yet very intelligent people won't believe them. And I'm not being, it's not like because I found, I think I mentioned maybe last time we spoke, that watching my children now go through university, and they come home with complicated stuff that I did economics degree, but I've forgotten some of that stuff. And when you see it, you go, fucking hell, that is really hard. Like, I totally forgotten how to do that. And that's really complicated. Yet if you see a boxer who's an XY or an XX beating up a woman who's whatever the other one is, there seems to be a willful misunderstanding of what the problem could possibly be. And you're thinking, how can we be in a place where this is really happening? Like if a caveman came up to us down us today, he'd be amazed with a lot of stuff, but he'd also all about laughing at some of the things we're told to believe at the moment. And I sincerely don't understand what that is, because it's not like I think this is something you need to be intelligent to understand. I've got a pretentious thing I'll murder this to anybody out there who actually knows more about the subject than I do, but I went to Catholic boarding school, Benedictine. I had a good experience, no dramas, so nothing negative. But you did learn a bit about, they had this thing called virtue ethics. So the seven virtues. I'm not sure. There's the prudential ones and there's the theological ones. The prudential ones are things like, the justice, temperance, courage, and something else. And then the theological ones are things like faith, hope, and charity. And I think the wisdom part of it is you have to get them in balance. So for example, when things get out of kilter, it's usually because they've too much of one, not enough of another. So let's say today, with this woke stuff, it's coming from, let's just say in the main, it's coming from a good place. Like there's an excessive, let's say, mercy or charity. So someone's very vulnerable or weak, or they're born in the wrong body, or they have unusual preferences, or whatever it might be. It's like the mercy card or the charity part of the virtues is like trump card. It's like, we just maximum power to that value. But the point of the virtues is you're supposed to balance it with a bit of prudence. Like, but is that person in Germany really a cat identifying as a man, or a man identifying as a cat? Or, I'm picking a ridiculous example, but you go, look, maybe he really thinks that, but it's not true. And then there's temperance and justice. And so you got to, you got to look at it all together. Because I think the problem is at the moment, if you say you don't agree, let's say, with furries being real, they jump straight to you're a hater or bigot. So no, you can say what you want, you can be what you want, but I don't have to believe you, and I don't have to think it's right. There's a big gap between that and actually it being a harm. Like I want to cause you harm or hurt you or do anything negative towards you. Do you know what I mean? There's a massive gap between the two, and that's the bit I think is completely lost.
We are, I suppose, of an age where I sometimes sort of double take on the fact that when I was younger, I didn't agree with my parents' attitude to things. And I wonder whether, trying to be reasonable about this, is there always something about being a parent that makes you not really understand the youth? Now, a lot of them are attention seeking. They're going through phases and they're being told all sorts of things. It must be really, really confusing. On top of that, they're being influenced by a lot of media that we would never been subjected to. I think we were very lucky not to be subjected to it. And they are being subjected to all sorts of opinions, all sorts of views from all sorts of angles. And the whole essence of the internet is to get likes, it's to get people to subscribe, it's to get people to validate you all the time. And in that environment, I know of, through my daughter, kids who are pretending they've got some sort of disorder in order to get more attention.
And Paul, have you seen? You must have seen. Is it OnlyFans? There's me. I mean, have you seen the numbers? My son's told me the numbers. I'm not going to say that because I'm sure they're wrong. I think 1 in 5 girls in America, but that can't be right. But there's some. The numbers are unbelievable. I know that from just the financial information, but the amount of people willing to do that bespoke for you, and sadly it's nearly all girls performing for guys. Age-old problem, and they'll do anything to get money or get noticed. I mean, I'm generalizing outrageously, but it's a historical pattern. It's horrendous, really.
My point here is that I find it quite annoying that some women just assume that it's all the men's fault that this is happening. They've made a choice to do that. They don't have to do that. They could do something else, and for society, it'd be much better if they did do something else. But they are doing that because they can.
I take comfort from the fact that, I don't know you guys that well, but I think most people are just normal and not weirdos, despite what I said at the very beginning of this course. But that was said deliberately as a joke, right? When that guy was making jokes to me trying to, because the last thing you'd want to be thought of was to be a weirdo. Or but the problem is you see massive overrepresentation of minority behavior all the time. So let's say if it's sexism, racism, whatever, you'll see the football player is black and he misses a try or a goal. There will no doubt be half a dozen assholes on Twitter next day make a rude remark mentioning his race. And there may be 1 million likes he gets. But the newspaper headline will be racism on Twitter. Elon, what's Elon going to do about this? Like, guys, the world is full. There's a lot of people in the world. Why not focus on the ratio of likes to hate? So when Mary Beard did that whole thing, when she got a bit of grief, because she's a fairly plain-looking historian, and so some people were saying mean things about her appearance, but some more an article saying she's really popular and really well loved by so many people, and the number of negative comments is so small in the scheme of things. You need to just accept that there are going to be a percentage of dickheads out there.
There's a great quote. There's a great quote from Churchill that goes along the lines of, if you stop and throw stones at every barking dog, you'll never get anywhere. And I'm slightly paraphrasing it, but it's a fair point. It's like learning to override distractions, or learning to discriminate between what's important and what isn't.
The problem is to popularize the stuff, like, and get it in a format that the average person is going to be interested enough to try and understand. But like Jordan Peterson said, if you look at the pretend men and women of various skills and representations and all the rest of it on a normal curve, they massively overlap. Where they overlap is more than where they diverge. So men apparently are overrepresented in IQ, let's just say. That's true at the tail. So the far right is going to have more men, but then also the far left of the spectrum, as in very low IQ, will be male. So what happens? So if that's true, you're going to see some of the extremely high IQ fields being dominated by blokes, which seems to be what we do see. To then say the system is institutionally set up to be, racist against female physicists, or sexist against female physicists, is like, well, look at you need to focus on the main body. 95% of men and women overlap in the middle, and if you're trying to make policy that helps the majority of people, don't be doing dog whistles to the extreme. Or why are there not more female CEOs? Well, hardly any men are male CEOs. You're focusing on the wrong area. You should be majoring in the. You shouldn't be majoring in the minors. You should be You should be majoring in the majors, not majoring in the minors.
Sorry to cut in. I think that the problem is that people are by and large very, very poor at dealing with statistics. The example I always used to refer to is when people would talk about apparent overrepresentation of, say, public school students at Oxbridge, and they're massively missing the point, because if and I know this from personal experience, because my now wife went to a state school but made it to Oxford, but she had to fight against the system, whereas I went to a sort of minor league independent school, and the system was sort of on my side. Back then it was more of a sort of open door policy, whereas now I think that the thing's changed. But the point I'm trying to make is that I don't know what the figures are, let's say for the sake of argument 75% of students at Oxbridge or the Russell Group universities are from public school, and that seems to be overrepresentation, given that we know that they don't account for 75% of the classroom population. But if they're actually like 90% of the applicants, they're actually underrepresented. So the issue is not what the percentage is; it's to what extent do they reflect the people who apply. And if you don't know what those figures are, then you can make the wrong point.
That's Bayesianism. Anyway, I'll tell you on this. Getting onto something that I found since we last spoke, that I quite like, because popularizing these things, making them more understandable, is not easy unless you want to pay attention. Have you come across Luca Delana? He's written a book on ergodicity, but he didn't call it anything annoying like that. He's got quite a good way of explaining some of this stuff, and he's got one that was pretty good about investing. I thought about the Bob and Sue. I've actually wrote it down so I'm going to screw it up. You know how normally you read a book about a successful investor or a successful entrepreneur, and you're normally going to go to the extreme version of it, like a Nick Sleep, for example, who made a fortune in 14 years or whatever it was by owning largely 3 stocks. Yeah. And including Amazon. So he completely crushed it. So the guy's obviously, hard to say that's luck. Let's just say it's skill. Then you think, okay, so is he the guy we should be generalizing the lessons to the general population? And the Bob and Sue, is it Bob and Sue? Let me have a look at this. Yeah, so I'll read it to you. It's not that long, but if you don't, shall I read it to you just quickly?
Go for it.
Yeah.
So Alice takes more risks, and as a result, she has a higher growth rate of 10%, but because of those risks, she's a high failure rate of 5%. Bob takes less risks, so his growth rate is 8%, which is lower, but his failure rate is 1%. Who do we expect to make the most money, Alice or Bob? So the answer is counterintuitive. Alice is more likely to be wealthier than Bob, yet we expect Bob to end up wealthier. So if you consider a period of a single year, Alice is expected to be wealthier than Bob 95% of the time. Yet if you compare the expected wealth, this is pretty not easy to say on a podcast, but Alice is 95% times 100 grand times 110%, which is 104.5 grand. Whereas Bob's is 99% times 100 grand times 108%, which is 107,000, let's say. So his expected wealth is higher, and there'll be more Bobs being richer than there will be Alice's. Or given 100 Alice's and 100 Bobs, the top 95 wealthiest entrepreneurs would be Alice's. Yet on aggregate, Bobs will have more wealth. Survivorship bias makes us think Alice's strategy is better because all the winners are Alice's. But her strategy is not better. She has high potential, but is less reproducible. Therefore, she ends up worse at the net of survivorship bias. That's probably something to maybe read. But it's more, I think that we are in a massive, especially podcasting and where they go and have these founders podcasts. I heard you with Stephen Wilson last week. And he loves that podcast and so do I. But I think there's something missing with what those podcasts are doing because they're picking the extreme right tail guys.
I think you potentially nailing it to the extent that, and it's no disservice to David Senrick, so this is a superb podcast, but it's a bit like, what was the example I was going to say? It's Jim Collins' Good to Great, and he's drawing conclusions from a pre-selected crowd of people who've already made it big. It's like saying, you know, it's a bit. I'm kind of mangling my metaphors horribly, but it's a bit like I think Buffett referred to it as sort of like the lucky monkey syndrome. That he said, if you had, and I'm going to mangle it, but hopefully the point will come across. He said, if it transpired that, you know, that 20 of the all-time best investors all studied under a particular person, you'd have to think there was something going on there. And he's talking about Ben Graham, and then he says that if you had, you know, let's say there's people tossing coins for a living, and you started out with 1 million people, and in the end you'd have someone who like calls heads successfully 20 times in a row, and he becomes a multimillionaire, and they then write a book about his coin tossing, you know, prowess. But that's purely luck, that's purely a fluke. So it's all about, again, the sort of the overrepresentation bias of, you've got a self-selected community that you're then making conclusions about, but it's what is the Latin? It's something about post hoc ergo propter hoc or something like that. Which is,
have you seen that there's a meme? I quite like some of these. I know I'm supposed to be growing up and not look at that stuff, but
they're great.
Okay, I'm glad you said that, because I know social media. I think it's like with all technology, there's good and bad. And if you want to see how bad social media is, like Twitter, like I use Twitter. But if you look at my Twitter feed, it is probably very boring. It's history, like investing, all that kind of stuff. Like very, very, very dry. But I'm sure I could have a shocking Twitter feed if I wanted to, with all the rest of it. But there's, I think, Henry Cavill, the Superman actor, very good looking chap. And there's a meme with him, like, you know, in his very handsome side profile face, winking at the camera. And he's giving advice to young men about how to pick up women. He said, if you see a girl and you like her, ask her out. It's always worked for me. So I'm thinking, yeah. So if he had, let's say the Founders podcast said, let's, for example, interviewed him. He said, let's go through your strategy, how you're so successful as a good looking guy with great women, or whatever it is. He'd go, well, I brush my hair and I brush my teeth and I have a bath every day. And because I can hear someone saying to me, no, but the Founders podcast, those guys, they were successful and they weren't just random and they were skillful. It's like, yeah. And it is true. You do need to wash and bathe and brush your teeth. But all these things are probably represented well amongst all the guys that fail as well. They are not the thing that made him successful with women. And I think the same with this entrepreneur or investing thing, where you go, well, yeah, Nick Sleep, he had 3 stocks. I mean, why have your 4th best idea? Why would you not have it all in your 3rd best idea, obviously? And all the most successful track records of the guys with the very concentrated stock portfolio. Well, statistically, of course there will be. There'll be the one guy that had Bitcoin only, and I beat everybody. So just
you never hear about the guy that had the concentrated portfolio and then lost it all.
Well, no, and statistically, what's worse about this example than the Henry Cavill one is some of the advice, like cleaning your teeth and brushing it. That's obviously not bad advice, but I think a lot of the advice people get from these entrepreneurs and these online gurus is actually bad. The average guy, tell him to buy a 3-stock portfolio and just focus and don't worry about 95% drawdowns because that happened to Amazon, is shocking advice, because all stocks that fail also went down 95% and they never came back. So you're kind of but I remember at the end of 2022 and all these guys who in the late 20s who'd only ever seen rising multiples, and then the SaaS stocks collapse, and then they're writing their year-end letter saying, well, and they started using literally Nick Sleep as an example in the letters about, well, these drawdowns are part of the process for great long-term returns. You're going, most of those guys are nowhere near recovered. And they, by the way, a lot of them have reloaded their portfolios. They kind of locked in their errors, and they just faded the fact that they were just wrong, which is fine. We all make mistakes, but you need to admit it and understand why. And I think there's not enough coverage of failures, because the people that lose don't write books, and the people that lose are the majority.
That's exactly what Taleb was saying. It's you learn more through failure. I can't remember who else said it as well, but there's another really interesting example that just comes to mind with that. If you wanted to be a presenter, one of the most popular presenters on the TV at the moment, you probably get all sorts of advice about how you ought to look and your presentation. But take Jeremy Clarkson. Most of the time, he looks like he's just got out of bed, and yet he's one of the most popular presenters in the world.
And I think that's down to authenticity. I think people can twig when someone's trying it on and they're not the real deal.
Well, that's exactly the point I was going to make. And it's the same in the markets, and it's the same everywhere. It's all authenticity and honesty about what you're doing, whether it's markets, whether it's any subject. And in terms of learning things, sometimes it's really hard to explain how you do something. And you can't make other people interested in something that they're not really interested in. And in the sense that speaks down to the way men do certain subjects and women do certain subjects, and there will be more, and therefore there'll be more people in certain roles because they just like to do it. And yes, there will be crossover in the Venn diagram, but mostly you find for some reason that men seem to like to do a certain role and women like to do a certain role, and why should we try and force those two things together if they're happy? We're constantly trying to say this is wrong, and there's too many. I tend to notice that there's lots of female teachers. Should we say no, that's got to be 50-50, or do we accept that women are probably better at teaching or have a more they're more
of a natural teacherly instinct?
Exactly.
Perhaps.
There's a very good, but I tell you, on that subject, because the thing is, three middle-aged blokes like us talking will convince not one woman anywhere about any of the stuff.
Exactly. I was thinking that before, actually.
Well, no, but I've got a cheat code for you. So there's if you get someone who's not a white middle-aged bloke to do a podcast and mention these subjects and have guests, it lands much more. People are much more receptive that maybe need to hear it. And there's a lady, she's called Louise Perry. She has a podcast called Mother Maiden Matriarch. So before you run away, I thought it'd be like, that sounds like, oh God, she's going to become a real woke warrior, but she's not at all. She's like a very nice English lady, and she interviews all these quite interesting guests, and it's all very polite. And she had one with a guy on. Was it her? And you're saying you got to wonder in America when they went through that subject you mentioned there. With there's a vast majority of teachers are female, and you're saying the problem with that is, number one, like you say, people never, they cherry pick. The women will look for where men are overrepresented in very high achieving fields where they get paid a lot. They will never look in all the crappy jobs where men are overrepresented and say we need more representation. Oil workers, please, or
firefighters.
Or in Ukrainian front, where all the
refuse
LGBT
collectors
community asking to be on the front line.
Sewage workers could go on all day.
They could, but it's true. Sorry, Jonathan. We were interjecting in your to support what you were saying.
Aggressively interjecting.
No, that's okay. I got you. Hold on, my AirPods are just glitched out there. Hold on.
Oh, right. Yeah. So sorry. Come back in with what you were saying when you're ready.
I think that she was saying you shouldn't have. Hang on, I've lost you now. I've gone into my phone. This is an embarrassing glitch.
It's okay. We can edit it out. Take your time.
Why are you not coming back on my AirPods? Let me try to turn my AirPods off and on again. Sorry about this.
That's okay. Yeah, it happens sometimes. It's really annoying.
Someone tried to call me and it just died. And
yeah. Well, coming back to the honesty thing, just quickly before you whilst you sort that out, it's that is the thing about the markets. And there's what you were saying reminded me of a book that I don't know if you've read this, Tim, called the Zurich Axioms.
No, I don't know that one.
So, yes,
yeah. So it's about that. It's about actually saying that there are times, and this speaks to your portfolio, which is why I really liked it. It was basically saying that you can be passive, and actually you end up taking a lot of risk. Because there is, the way I see the markets, there is risk all the time. There's risk in doing, there's risk in not doing.
Well, and it's another subtle point there is it's not even just the insurance. Let's say you have a part of the portfolio that seems to do nothing, just provide insurance. So, but the problem is when the times are good. So now you have, let's say, 80% of the portfolio is in normal stuff, and then 20% is in this insurance stuff that does nothing most of the time. So you will be lagging the market. But it's also the portfolio maths is quite tricky. So is you're also not getting that 20% could have been chasing everything else that everyone else is in as well. So you're not only getting 80% of the upside, you're also not getting the extra 20% of all the good stuff that is. Like I learned that with Tony Deeden and Edelweiss. Like his stock selection is all right, but it's his massive allocation to gold that is the big thing. And a lot of what that way wasn't even it's surprising how much his fund went up. When you look at gold, it didn't go up that. You would have thought it wouldn't have had that much effect. It was more the fact he didn't have those stocks in those bad times. So he survived better than everyone else and didn't have to recover those losses. Do you know what I mean? It's
I think
I'm not saying that very well.
No, exactly what you mean.
To the merit of an absolute return capital preservation approach as opposed to a sort of an index relative one. There's a lovely line I like, which is along the lines of, I don't know who said it, but it was, risk is what happens when you think you've thought of everything. And you could have, for example, a portfolio that's heavily, if not totally, in cash, but that portfolio will fail catastrophically at one of those extreme moments when cash itself gets massively devalued, which I think is something that we're in that environment now. So the analogy that I've used to death is, or the metaphor that I've used to death is basically, I know I can't time the market, so I don't really attempt to try. But I think what you can say, you can assess when, if you imagine snow settling on a cliff, you can assess when that environment has shifted from being in stable equilibrium to unstable equilibrium. And once you identify that, you then know that at a certain point, one snowflake will trigger an avalanche. You can't forecast when precisely that'll happen, but as long as you're aware that the market is in that condition, then you respond accordingly.
That's the sandpile game, isn't it? That you're referring to.
Do you remember Doug Casey? Doug Casey, the one practice I have, and I do it deliberately, and it actually is really painful. And for all this talk of humility and the rest of it, if you think you're humble, but you're not just index investing, you're lying, because the very fact that you're not just index investing means you think you could do better. So let's just admit it to yourself and say, I think I could do better, but it's fine.
Sorry to cut in, but it also depends on what your objective is, because that presumes you're trying to beat the market, but some of us aren't trying to do that so much as, let's say, generate consistent positive returns. So it also depends what the objective is.
Yeah, that's a good point, Mr. Price. So having just been corrected,
sorry if that came across school mommy. I think there's a broader point here, or at least there's a broader point in my mind, which is what the primary objective is to try and find an investment approach that matches your personality,
exactly.
that doesn't sit at odds with your personality. So I think most people are probably conservative, and that may be incorrect. But I think most people are conservative, and we know from the sort of psychological testing and research that's been done that human beings, by and large, are risk averse. So this is like Kahneman and Tversky stuff. Therefore, I think most people would probably benefit from let's say, more of an absolute return objective than an index objective, but they just don't. They haven't necessarily thought about their own psychology. Value investing, which is clearly something that we endeavour to practice, is also a highly successful long-term approach. But as people have pointed out, it involves periods of excruciating short-term underperformance. And most people, when faced with that, even though they've signed up to it, they just can't handle the drawdowns, and they will therefore get out at the worst possible moment. So I think the quest for most people should be, can you identify a process whereby you'll stick in it for the long run? And that process may well be more like who did you cite earlier, Jonathan? Was it Alison Bob or
yes, yeah?
And I think that's the Bob. That's the Bob approach, which is at odds with what Buffett said, because Buffett said, I would rather have a lumpy 15% return than a smooth 10% return. But I don't think that's most people's preference. Most people, I think, would actually, in their heart of hearts, would prefer the smoother 10%.
Well, this is something I find very troubling with because I only think about this because maybe the age I am and some friends I've got who are not in the financial sector. So they made a bit of money as an entrepreneur, and they sold the business, and then they go, I'm now going to become an investor, let's say. And they read books, and they then go and start doing it. I think, well, I was an entrepreneur, I'm a successful guy. I guess the halo effect, I think I'm just start investing. And it's like, guys, I think there's a book written by, who wrote this book? There's a book by The Missing Billionaires, A Guide to Better Financial Decisions, using the Missing Billionaires puzzle to explore how and why most investors fail. And so the tagline is, in 1900, there were 4,000 US families with over $1 million.
Where are they?
Think about 4,000, and that was 1900 to 124 years ago. If they had invested in stocks, there would be 120,000 billionaire families today, but not one billionaire family today traces back to 1900 group. Why? And you think that, I mean, I know that you can go, well, what about inheritance tax? And it's like, no. Like, I mean, the numbers are so far off. Where are they? And they go through how people who, I mean, there's a lot of reasons, but people who make money in business are not usually, they have a very different temperament to the kind of one you need to stay rich, like to get rich.
Well, that's surely a confirmation. That's surely a confirmation of the phrase "shirt sleeve to shirt sleeve" in 3 generations. It never sticks around.
I think Swiss banks actually. Well, I know they explicitly build that into their model about how to handle families, because of course it's in their interest for it to be more than 3 generations, obviously. And it's so well known, but it's almost impossible. You can't stop people from themselves. And I was thinking, there's an awful lot of talk about. And these investor letters you read and all these types, they talk about critical thinking. And I wondered the other day about critical feeling. So you need to really, before you even invest $1 of your own money in anything, you need to really, and I've never seen this done anywhere, but that's why I'm going to recommend this book at the end of the call, because he's pretty good at this stuff. You do need to really think about what kind of a guy you are. Like, you look at your kids or your friends' kids and what's their money personality like? Like, are they thrifty or not? Just generally. Or if you're a bit older, were you the kind of guy that was having a bit of a flutter on crypto, or just a bit of a flutter on this? Or the guy you work with who would have an Aston Martin before he could really properly afford one, was levered way too much too early in property, which of course has worked out very well for him. But I don't think that's skill. That's just because he wanted to have a fancy house and show off. But as it turned out, it's worked out famously well for anyone who's done that in the normal cities. And I just think you need to look at yourself and go, yeah, but those kind of people are not usually good at investing. They'll overtrade. They'll fall for the latest thing. They'll be in the AI stuff now. They'll be in the 3D printing a few years ago. They'll be in the solar power, whatever the crypto NFTs. They'll be going from thing to thing. Intellectual butterflies are another category of person you should be wary of as an investor, because they love getting deep in the weeds of every new thing, every new strategy, every new style. And there's always something to it. And there's some truth in those things. But I just wonder whether we should do more calm. And it's not critical, because those skills or those behavioral tics are good for other areas. With investing, Warren Buffett is an unusual guy. Like, you've seen his house. He's not your usual cut of guy in the first place. And I think the older I've got, the more I look at people who invest, I look at the sort of person they are, which is also quite unreliable, because you only see what they show you. But there are clues over time, and you listen to what they say and watch what they do, and hopefully they match up.
I can't remember the name of the company, but it's a fund management firm in the States that is actually quite difficult to engage them. So if you approach them as a private client, they will give you like a day-long session on their process. And then when you come back, maybe a week or a month later, they will then give you a test on their process, and if you fail the test, they won't take you on.
I've never heard that.
It's a really interesting approach. I mean, I don't think you necessarily need to get the sort of the exam book out, but the idea that you really go the extra mile in terms of trying to ensure that there's a mental fit between you and your client. There's a lot to be said for that.
Well, imagine this would never happen, but imagine you said, let's have a look at your stockbroking account, your online, your Revolut trading account, or whatever it is you. And if you see the persons all over the map, it's like, okay, well, you're right. I have no interest in having you anywhere near what we do, because you're going to be saying you're long. Like, look at Terry Smith's fund. Terry Smith, it was in the paper yesterday, as in his fund's been criticised for his 1% fees are too high because he's underperformed for the last few years. And you're thinking whether you do or don't like him or his strategy. Like, his fund has gone up 6x since 2010. And it is a high growth, kind of high beta qualities sort of strategy. So you need to judge him, I think, against that kind of style of investing. I don't think it's reasonable to judge him against the MSCI index, because you by buying his fund have made a call on the style of investor he is. So you need to, because you can go and buy yourself a high quality compounder ETF, easy enough for nearly nothing in fees. That's your benchmark. But the market has no patience for 3 or 4 years of underperformance, when if you look at the very best investing track records of all time, it's normal to underperform 3-5 years out of 10 on average. It's not unusual. So if you're expecting someone to continue well in a 1, 2, 3 year view, well, you're expecting something that's never really happened before with any investor.
But that comes down to patience again. I mean, patience is such a. There are so many value investors who have made the same point, and I'm thinking it's Peter Cundall who made this quite explicit, that the most important attribute for investing, successful value investing, is patience, patience, and patience. And then he said in capital letters after that, the majority of investors do not possess this characteristic.
Yeah. Something I think about it as well is there's all these clever words for paradoxes and the Gell-Mann effect and all these things. There's one I think we need to have. I like Phil Tetlock, the super forecasting guy, and he he just says things that's quite sensible. He said, what happens on page one, let's say Brexit. If you're for or against Brexit, this or that will happen. You never get the 5 year later, let's have a calm analysis of did or did that not happen. Or the war, these sanctions we put on Russia were for this and that reason. Okay, what were the goals roughly? What would be considered to be a successful sanctions program? If we saw X, Y, and Z in X years from now, just write it down and then go back. And no one expects perfection, but at least you revisit, but it just goes away. And then today you see Germany, they turn nuclear plants off. They're now going back to coal. Their industrial production is going down. Their energy prices are going up because they're not buying from Russia. You're thinking, whether you think morally they should or shouldn't buy from Russia, that could be something in the equation too. But you do need to go back and look in the mirror and go, look, are you basically buying recycled Russian energy via India, guys? So at a far higher price. And is Russia stopping? I would be a bit more cynical about a lot of that, because obviously it's not solving the main goal. It's highly counterproductive. It's helping form alliances between countries that aren't particularly friendly towards us. That doesn't seem to be mentioned at all. So you have this day one effect where you're told what we're doing, and then everyone's going proudly around saying the little Ukraine flags and this. God love the Ukrainians, and even the young Russian guys who are being forced to fight. It's not great for any of those fellas, whatever you think of Putin's behavior. But I think you do need to look back at has it worked? And there's not much analysis in that. Well, but Brexit is one that bothers me, because you see that the FT has become quite a left in this. They were very good at every time there's a negative data print of the UK economy after Brexit versus Germany or France, it'd be headline news caused by Brexit. So here we are today where the inverse is happening. I don't think that's because of Brexit, by the way. I'm not pretending Brexit was explaining why UK is doing better than Germany today. But there's nothing on it. And you're thinking, well, that's just, number one, you're just cherry picking when it's one way you focus on it and explain it as due to Brexit. When it's the other way around, you say nothing. When the sterling is now, I think, back to the same trade-weighted level it was at the beginning of Brexit, and there's no coverage of that. And you go, that's not right. So people come away with the general belief of what happened day one was they don't revisit.
It's politics of spin, isn't it? That's why I really don't like politics at all. It's how you frame things, and we're seeing that with the Labour government right now, saying that the Conservatives left them in a mess because they've got reneged on all their election promises and decided that they're going to raise tax that they said nothing about before. Not that I pay much attention to what any of them say and look at the markets, but what I can say, even though I wouldn't expect this to happen in a Labour government, the stock market's going to break into a new all-time high very soon. And it just has to, because everything else is, and it will go high. It's probably slightly being held down by the fact that sterling's going up, and sterling will probably go up a lot more against the euro. But if you're looking for things to make sense, the markets don't work like that. And I think that's the approach that most people take. There's a logic in the way that markets are illogical.
Yeah, there's a guy called Andrew Hollingsworth, and I wish he had, he's got some fund in the UK, and he writes quite thoughtful pieces, and he had one about things people think the market reacts to and the things the market historically does react to. So, there's an awful lot of talk about a couple of years ago of an imminent recession, and then what that means for stocks.
Yeah.
Well, because I must admit, I fell for that. I know that, for example, countries' GDP doesn't really correlate with the stock market performance of that country, which is quite weird. Like China's stock market done nothing for decades, and India's gone nuts. But both countries have grown, so it's not obvious. 30 years ago, you say, "Well, buy China because, my God, in 30 years it'll be so much bigger." So
you could perhaps make a point about the efficacy of a big state, because India's got a far closer to a capitalist system than China has.
Yes, and there's reasons like that. The other one is recessions are not as reliably linked to downturns in stock markets as you might think. Well, the other one is stock markets. If we have inflation, you've got to by being gold because, oh my God, you lose the real purchasing power of your money. Well, stock markets tend to do pretty well in inflationary regimes, maybe not as well as other assets.
I think Napier said, but once they get above, I think inflation gets above 4%, it's problematic for stocks.
Well, talking of inflation, how about deflation? So we had somebody on the podcast who was short China and that region. And this is another example of sentiment versus technicals. The Chinese stock market hit a low in January this year and has not gone any lower. Everybody you talk to say they're bearish on China. Chinese stocks have got to go down. Which way have they gone? Up. Right. They had a rally, they retraced, but Hong Kong market was up, 600 points a few days ago. And that looks like that's basing out and it's going to go higher. It's a classic like contrary opinion theory trade. Knowing nothing about what's really going on in China, I can tell you that there's a very good probability that the stock market will go up.
I tell you, China is one of the puzzles that I don't know how to think about it. And I'd be interested in there's a guy called David Iburn who runs Copernic in the States, and I met him a while ago, and he has quite a bit in China. And I was saying, well, how do you think about investing in China when now we've seen Russian stocks can be set to zero in effect, even if they're not actually zero? This is it's quite a new thing, right? Where it's not the war made it go to zero. It was a policy said you can't own Russian stocks. So that's that. So now I wonder with China, and I mean, because the value in China is just obvious. You don't need to be clever. It's right there. But there will be people that will invest 30-40% of the funds in China. And I just think, well, China is behaving and acting in a way that is consistent with at some point doing something about Taiwan that the West will probably not be happy with. I don't know what the West response is, but surely a low-level option would be, because I presume full-on war is not an obvious one anyone wants to do, but they could start dicking around with financial rules to make it difficult for China.
Oh, definitely.
No one can own any Chinese stocks. So your stocks go to zero. The thing is, if you think about that, if you have a portfolio where 10% in China and it goes to zero, I mean, that you don't recover from zero. Whereas if you have a normal stock market downturn and you hold on and it comes back again, you're okay. You don't come back from zero, though. There is no okay there. The compounding breaks when you're reset at zero. So does that mean you don't have any Chinese stocks? I don't know.
Well, the point that I'm making here is not that China is what you should invest in. I'm just saying it will go up. It's the good probability that it will go up. There may be something better to invest in. There probably is. In fact, the US is a better investment than China, even though the US is higher. But the point there is that with other things, when something like that is going to happen, people think that these events just come out of the blue, and like one day the market's merrily going up and the next minute it goes to zero. That's, again, another technical thing. You can see these shifts because if that's going to happen, information has a leakage. It leaks out. People get to hear it and it goes through the underground networks, and then people start selling. It's a bit like in the September 11 attacks. The markets didn't go down in September. In fact, they based off the September 11 attacks. They were going down in June, July, and August, and that's when gold was rallying really aggressively. All the signals that something was coming comes months before. So what technicals allows you to do, and again, this is why I look at charts, is it tells you when you're dealing with an unusual situation, like something that there is a change in market dynamics that is completely unrelated and in a completely different way to what you've seen before. And if the market,
I'll have to push back a bit here, Paul. I know this is your thing. And
you can say whatever you want. You say whatever you want.
But the thing is, so in my old job, right, I covered for 20 years all kinds of investors, fund managers, central banks, all the kind of categories you can imagine. And at the beginning, there's endless. Everyone has their own. And here's you have a very Bloomberg terminal. There's bazillions of chartist techniques, and you can buy courses. I went on courses that are part of my training.
Okay.
You can kind of kid yourself to death with charts. And I know people who are, let's say, the Austrian. No. Let me finish. Let's say you're an Austrian-minded person. I'm not going to mention names, but there are people that we know. They're incredibly bright people, but they have an Austrian bias, right? So they will be tilting the charts and drawing lines with this and that point and the other thing, and sentiment indicator, Bollinger Bands, and God knows what, Fibonacci retracement levels, reverse head and shoulders, and positive head and shoulders, or no, let's zoom out, or the Elliott wave, or this is a third of the 5 waves, oh no, this is the second of the third of the 5. It's like it fucking does my head in, because you can rationalize with charts any outcome you want. And the problem is you'll find a guy who goes, well, I did it and I made money on that trade, so my chart was like, well, I know, but I've been covering you for 5 years, and I know that you're telling me about the times it worked, but it's totally unreliable. And if it's reliable, where are the fund managers with real track records who use it and do well? I don't know any. The only technical trading I'm aware of. So
Stanley Druckenmiller.
But would you say there's okay? So you're picking a couple of guys. Would you say they're trend followers?
Well, yeah,
which is the only that's the one that I am sympathetic to.
But it's an interesting argument, and I'm not here to convince you one way or the other. It's like that's completely up to you. But what I'd also say is that just because somebody magically talks about charts, it doesn't mean they necessarily know what they're doing. I used to teach technicals at the City University, and a lot of the charting that I saw was absolute trash. It was rubbish. It was a lot of the stuff I see day to day is rubbish. So of course,
if you go to what Tim Price's comment earlier on about Berkshire, like if you have someone like who's follow Graham Dodd, and then you look at the kind of proportion. So is he lucky? Is Nick Sleep lucky or skillful? Well, there's one of him. I think he was skillful, but you could say he was just lucky. I don't think that's true. But if you see people that follow a certain philosophy, on average doing well or better than average, you go, there's something in that that's true. And so for me, if I go trend following, as Tim articulated in the podcast before, they do well on average across a lot of regimes if you're patient. So there's something there. But if you say chartist technical, where are they? Like, I don't see, there's no evidence that there's a broad cohort. You mentioned a couple of names, which are true, good answers.
But
I would say it's not likely to be reliable.
Yeah, but it depends where you look, and it's that is the problem. So I could say, well, why bother with economics? There's so many people who use economics, and none of them seem to. So economics is a worse subject to understand the financial markets. So what I'm saying is a simple understanding of technical analysis will give you an advantage. Now, on top of that, many people overcomplicate it, make it confusing, make it intractable, use language that is, makes them sound really clever when they really don't know what they're talking about, don't understand the basics, and they pass that on. And I read stuff that's absolute nonsense. Well, I don't read it, but I see it and I think you really don't understand what that is. Let me give you another example. It's a bit like giving everybody a camera and saying that, well, you've got a camera, now you're a photographer. To be really good at it, you have to really know what you're doing. And I'm not saying that's me. I'm just saying, honestly, that's how you have to approach it. Part of the markets is seeing what is in front of you without your own bias. A lot of the people that you're talking about, they're pseudo chartists, because what they'll do is they'll say, oh yeah, this might look a bit bullish, but Labour's come in. There's no way the stock market's going to go higher. And oh yeah, gold looks like it's a bit toppy, but there's no way it's gonna keep going up. This trend is too strong, and I'm going to short it. And they short circuit their actual views about the market.
I think we're maybe talking past each other, because I know that there are some people that may be able to use chartist techniques that work reliably for them, but I would say that they are really, really rare.
Well, yeah,
whereas if you say
but that's the whole thing about the markets. Yeah. People who are successful are really, really rare. It's not.
I mean, you could probably make the same point about value, which is a type of investment approach that a lot of people practice, but there are very, very few sort of long-term winners from that. Most people probably end up permanently underperforming. But to use an example that I've used on numerous occasions and client pitches, I have a friend who did a very crude analysis, and he said, I want to find the world's best funds or best fund managers. And so the arbitrary selection process was basically they had to have at least a 20-year track record, an unbroken 20-year track record, and that 20-year track record had to include, on average, annualized returns of 20%, which is virtually impossible. But the long and the short of that is that 11 funds or vehicles were identified, of which Berkshire Hathaway, which is technically not a fund anyway, it's a holding company, but Berkshire Hathaway squeaked in at the bottom of that list. But of those 11 funds, 6 of them are trend following funds.
And the point of that is, what is trend following? Trend following is using very simple techniques to enter and exit a trend. Everything else is money management. So all the things that you're talking about with these chartists and whether they get it right or wrong, they don't even consider that part of it. Portfolio management. That's actually where things make it. It's not, oh, I called this or I called that. That's irrelevant. It's like, how did you manage your capital? What did you allocate it? How much did you allocate to that trade? And how are you going to leg in? How are you going to leg out? How are you going to stop? What tells you that you're wrong? All those things are far more important than the actual trade itself. So that's why it's not going to work. You're using some MACD oscillator that is going to, in a very short space of time, show you where to buy and sell, and you think you know what you're doing, and then suddenly the market goes into meltdown, and you're just buying because it's giving you an oversold signal. You don't know what you're doing. You have no idea.
No, we all agree. So the three of us, I think, we all already agree on about trend following. But I think I'm going back to the Alice Bob example. I think you want the Bob solution. We just you go trend follow, even if you pick, and the same, I see the same as value, because I think the point is, let's say someone listening to the podcast is an average person, like we're all average, but just they're not like a financial geek. If they go, right, I'm going to buy some value fund, I'm going to buy a trend following fund. If they bought, let's say they're not very good at choosing those funds, they buy an average value fund, there wasn't a good choice, or they buy an average trend following fund, and it's not a great choice, not a bad one, not a good one, just an average one, which is most likely, right, statistically. they will be like Bob. They will probably do just fine over time if they stick to it.
But they won't. That's the point. That's the point. That's the crucial thing. Trend following can spend 3, 4, sometimes 5 years underperforming. People won't stay with it because they don't understand it.
Oh, I see. So, no, hang on. So I didn't say if they I didn't say if they give up. Like
no. You said if they stick with it, but it's that's like saying, well, you need to stick with your diet.
Well, no, but
it's really hard to do that.
Yeah. So can I just finish my boring point? So the bit I push back on with you a bit there is that a bit where we may disagree is I think if you start getting them into more niche sentiment indicators, like I think then you're now opening up a door to complete pain. Like nearly no one does well like that over time.
I don't know how you define that.
Well,
I'd need to see some data.
There's hardly any. Well, yeah, I think this in the track records of people with real records, there aren't many who, as a percentage of very successful ones over long periods of time, that do that. Well, so I just think to tell people that if you tell the average person go and find some online sentiment trading index less educator, they're going to be going and buying a lot of snake oil from a lot of people who have short-term things that promise great returns that don't really work well through multiple cycles. There's
a lot of sharks out there. There's a lot of dodgy stuff out there. That's absolutely for sure.
Yeah. So given this podcast is going out to general population, I think it's sensible to just suggest don't overthink it. That don't obsess about sentiment indicators and so on, because that's not helpful to most people. They won't know where to start or where to spot the difference between snake oil and reliable indicators. Because you need to think about people making a mistake, like buying an average value fund or an average trend fund. That mistake won't cost them much. They'll just limp along. They won't do as well as they could have done, but they'll be fine. Whereas if you I'm going to buy a course I saw online about charts, it's like, well, and I know that's probably not going to very unlikely to end very well.
It depends who's doing it, really. But yeah, I would say so. But it's measuring sentiment is actually an art form in itself. I would say you have to know what to look out for, and it comes back to what I think you were talking about before in terms of, for example, if somebody's a great basketball player, can they teach you to be a great basketball player? I don't know. So maybe the problem is that the people who are doing certain things have a natural kind of way of doing it. Like Paul McCartney trying to teach you how to write a song, you go to do something and he'll say, well, I wouldn't quite do that. I would just do this. And that's sort of something that he can't explain. That there is that element of teaching that is actually very, very hard to do. And unless you're really interested in something, which speaks to what Tim was saying, it is all about what you find interesting and where you're going to find information from and how you read that information as to whether you'll stick with it. I love the idea of value investing. I've tried to read books on value investing. I read David Dremen's book, which I absolutely loved, and I thought it was fantastic. Yet it still doesn't. I still can't invest in a value way because it doesn't fit with my personality. There was some parts of his book that I thought were just exceptional. And then there are other parts where he says, where I look at it and say, okay, this is where the differences are made, and this is what I don't get. Well, he'll say, well, you look at a company's balance sheet, and you've obviously got to look for things that are off balance sheet and stuff like that. Well, so I was like, hang on a minute, you haven't explained how you do that. Or how do you look for something that's unusual? Or define unusual. I don't know what unusual is, but maybe after sort of 20 years of reading balance sheets, you know what's unusual. Maybe after 30 years of looking at charts, I know what looks unusual. So how do you explain that?
There's a fantastic anecdote. I forget which entrepreneur it is, but it's a fantastic anecdote. I was listening to one of the Founders podcasts earlier a few days ago, and it was a guy that had a fairly successful starting point in, I think it was real estate, and he went off to a conference to learn a bit more about it. He went off to a seminar on real estate, and on the back of that, he then twigged that he could make more money running conferences than he could in real estate. So he set up a conference business instead, and I just thought that was such a funny observation about having a sort of mental flexibility, and also the number of people who are basically going out to make money from providing advice when there's not necessarily any substance to it. I found it a funny story, but maybe I've kind of butchered the anecdote somewhat.
Well, was it Paul Tudor Jones who said the markets will test you to your absolute limit, and that's even when they're going your way or something. It was like the whole point of this is that it doesn't matter what your discipline is. The markets are hard, and they will always be hard by their very nature. It's like getting a degree is not easy. There has to be a level of filtration in order to get to that pinnacle. And even in success,
I'll try one more time. So I think we're talking past each other. So you're if I can summarize what you're saying there are ways to invest or trade well using chartist sentiment, like whatever. So yes, so there's no debate about that. I know that can happen.
Yeah.
I'm saying let's say there's 100 different styles of investing. Let's pretend. I'm saying if you list them all about which are the most repeatable and reliable, generally, there are some that seem like trend following, like Tim's example earlier on. That seems to be broadly quite reliable over time. So I'd say that one is pretty sensible for most people, because you don't know if you're an Alice or Bob yourself. The problem ex ante is you don't know which one you are. So if you're picking a style, I would just think it's wiser to start with, unless you have special needs. It's not about you, Paul. So you have a special thing because that's your thing. You lectured and all this stuff. So fine, that's you doing your thing. But I think for most people, me included, I think you go for the things where they seem to do well enough over time. Fine. And even if you're wrong, you survive and you do okay.
So definitely.
But that cuts out most styles of investing, actually.
It
doesn't mean that the other styles are wrong. It's just a different way of looking at it.
I think we can square the circle by saying 99.9 recurring % of commentary and what is written about investing does not make it clear enough that there's an element of psychology that you need to experience for yourself before you can start lecturing other people about it. In other words, the psychological difficulty of this is so extraordinarily high, and you can't really teach that. It's a bit like riding a bike. I mean, you could, or sexual intercourse. You can read as much about it as you like, but nothing quite makes up for the act of doing it yourself.
And also with that, I think I would totally agree with what you said there, Jonathan. If you are somebody who is just interested in making a return over the long term, there's many things you can do. You can just invest in the stock market if you want. You'd have to ride out some crashes, but if you leave it there long enough, you could buy gold over the long term. This is a point. Even through periods, if you can ride out a decade of it underperforming, it will eventually perform. It depends, and that's why I was focusing on. But
most people don't have that stamina. That's
exactly.
So
that's what I'm saying. So it's how are you defining what works for most people? And in the end, people will just jump to what is hot at the wrong moment, because that's when there's most media coverage of that particular asset. And that's usually a good sign that it's nearing the end. So for example, we've got the AI story, which all the AI stocks have done extremely well. And then, well, how long will that go on for? We're not really hearing very much about gold going up. But if you wanted to,
if you can reduce the portfolio level volatility, I think you make the path easier. So, for example, if you were, let's say you managed to, I think, do a bit what Tim does, like your clients have some trend following and some value exposure, then in nasty years when most people get shaken out and frightened, they won't suffer as much. So they're more likely to stay the path with you. So in 2022, I don't know how you did, Tim, but you probably did all right, because your trend following stuff did okay, I presume, and the value stuff didn't get hit as hard as everything else. So you would have looked quite good. So years and years of saying, well, you're doing sensible. Then you have an actual test year and you go, actually, that was quite a good year. So this seems to work. And it just means you have a higher chance of them staying on the boat longer. And I've got a funny thought about that, which you won't like this, but I was talking to someone about KKR, this chap. And I was thinking, these private equity guys, everyone, right, people on the inside of the business will say, they're just laundering volatility. Everyone knows what they're doing. It's just you're hiding the mark-to-market volatility, but you're getting equity-like returns. And by the way, the lads running these places are getting ridiculous performance fees, which it's not reasonable. It's not skill. You could argue it's just hidden leverage. But then and part of me is thinking, but what if that makes people stay on the bus longer than they would have otherwise done? Because they don't live through the drawdown. So in 2022, when the market's going down, they go, we've outperformed the market. Well, you haven't. You just aren't marking your stuff to market because it's inside your private. But do you know what I mean? So on the one hand, you're going, I see you, I know what you're doing. And I also know why pension funds use them, because they can then say to their investors, oh, look how smooth you were in that bad year. But we all know, nudge, nudge, wink, wink, it's because you're not marked to market.
Morgan Housel makes an excellent point in one of his books, which is that for most people, their property is the most successful investment they'll ever have. And the reason is because they don't sell it, they don't trade it, they have to own it.
What's it, the coffee can portfolio? Yeah. But is that, Jonathan, what you were just saying there, would that be a fall by randomness thing?
I don't know. I should say, yeah. I've been listening to Taleb recently. So as part of my exercise earlier on, I've listened to people I find difficult. Like I think Seth Godin said something. Didn't Seth Godin say something recently? A little anecdote. I wrote it down. What did he say?
Well, I'm interested.
One mark of a smart person is the ability to learn from people they don't like. So Nassim Taleb is quite a difficult person to like because he seems to fall in love with people, then hate them, and then block them, and then tell everyone how it's a virtue because he's just refining his audience. He some people will call it an echo chamber, but he does. Have you seen him on? He's coming out now more and more YouTubes and podcasts. So I think he normally does that when he's about to build up to a new book. So I guess a new book's coming out. But he's one of those guys, I have to admit, I've learned a lot from him, and I find some of his ideas like Lindy very useful. But he's also fucking annoying.
Also, I totally agree. I totally agree. And Charlie Morris has got a story for you on that. If you listen to the podcast that we did with him, because I asked him about his Bitcoin view, and we were discussing exactly that. Yeah. And I totally agree. I'm really torn about Taleb because I love his books, and I thought what he said made a lot of sense. But then, during the pandemic, he was saying something about wearing 2 masks, and it's like, what? How can you be?
How can you be wrong at the top of your voice like that?
Yeah, exactly. I mean, you're actually like, you're not even thinking about the infection you might cause by wearing 2 masks, are you? Or whatever. It was just so weird. And
do you know, he blocked me. He blocked me and I'm not an angry person on Twitter at all. If you follow me, you know that I'm just a boring fart. But I do reply. So he goes on about the precautionary principle and how things you've got to be careful of multiplicative risk. So, for example, he doesn't like Monsanto because they make genetically modified seeds. And what if one of those seeds, for reasons we don't know, could possibly have something bad in it, like it's crossbred with the pig or whatever they do with the gene splicing, and then it infects non-GMO fields, then we're all screwed because we now have this thing we can't stop. So the multiplicative bit's what bothers him. That's why what about masks? It's not you wearing the mask, it's 2 people wearing a mask because I stop infecting you and you stop infecting me, and anyway, all this stuff. But then I said to him, okay, but is there not a precautionary principle about injecting an entire species with a novel? By the way, this is not a pro and anti. I don't want to start a fight with anybody about vaccines, but just pure logic of it.
Yeah,
you're about to. His part would be inject an entire species with a novel vaccine. Like that seems to me. Are you kidding? Like at least half of them, maybe just have half of them. Because what if they turn out 5 years' time, there's some god-awful unintended side effect, as there has been throughout history with drugs that seem to be totally fine at the beginning, and then they turn out not to be.
So we're granted unlimited non-liability by government.
Well, let's just say the risk is not zero.
Forced through its speed. It was not zero. And also by this time, we knew the disease is not, it's not great, but it's not killing young, healthy people. So you've now just given those young, healthy people a vaccine when they were never really at risk in the first place. Like he just blocks you. So he's very good at silencing stuff that doesn't, and no doubt he'd send back, if he bothered engaging, a huge maths paper like that's a definitive answer. That's his usual. Yeah, he triggers me a bit. The same way when he was going through a whole deadlifting and powerlifting phase, he was going through all these. He's an overweight middle-aged bloke. I mean, I'm not a doctor, but I'd imagine number one would be just lose weight. I mean,
I quite like Jordan Peterson's perspective, which is when he basically says that everyone thinks that in the 1930s they would have been anti-Hitler, but now, given what we've lived through, we know that pretty much everybody would have been pro-Hitler. Everyone's fallen into line. Nearly everyone's blithely joined the mob.
So Tim, I have a question for you on that one. That's a classic one I don't understand. So you'll have the left wing today throwing fascist around a lot. They are the ones who seem to have quite strong views against a certain group that the fascists also weren't very happy with. And you do think, is this like some god playing some sick joke where people? I'm not saying they are the same, but I do think it's funny how when you learn a concept from history, like you shouldn't be wary of people who have propaganda. You can't think anything different than what they think, even if it's quite novel. And maybe there are some grounds to worry about every ideology. They ban books. They're no platform people. They don't like the opinions of.
Well, I love the idea that the Democrats are warning about Trump being anti-democratic, and they've basically just had a callous coup against their own president, who's now been replaced by somebody nobody ever voted for. But I think in 2024, the terms left-wing and right-wing no longer make any sense. The only real question is, are you for a big state or are you for the individual? And that's all it comes down to.
I think the conservative thing, one thing I think has been lost is they seem to be, they talk about being economically conservative and free market, which they're not, but it seems that the conservative values part is
they've completely lost touch with their source code.
Gone. Yeah, that's right.
Can I ask? Can I just pivot slightly back to gold, because I just want to ask a quick question of both of you, if you happen to know the answer to this. A lot of the time, gold is considered to be manipulated by the banks or whatever. I've heard that phrase many times. People have
there've been settlements by the likes of HSBC and JP Morgan for rigging. So that's chapter and verse.
Right. So when it's not going up, there is this consideration of it being manipulated. But as it is going up at the moment, would you consider it to be manipulated higher, or there's less manipulation, or how do we gauge that element of it? From a technical perspective, I say I don't know, and I just take it out and I just say it goes up when it goes up and it doesn't when it doesn't. But if it was to be manipulated, I would have expected it to be manipulated all the time. And if it's manipulated all the time, what does that say about it going up at the moment?
I'll just very quickly wade in, because I don't think you'll ever necessarily know the full truth or the reality. But my suspicion would be that certain players participate in the market to try and suppress some of the wilder up moves. But ultimately, I side with Mrs. Thatcher that you can't buck the market, or you can't buck the market forever. But it's beyond my pay grade.
So I would like, the childish part of me would like to believe that, and I as not what Tim said, as in that there's manipulating the market, and I know HSBC did, but I don't think that's manipulating. The government said, oh my God, we've got to keep the gold price down. HSBC go and pat it down to stop the people panicking and losing faith in the fiat system, and the whole thing's going to collapse. I don't buy that. And I think I can call on, which I think is quite reliable, but I'm not saying I spoke to the people, but I dealt just as the bump and grind on my job. Well, I can't say bump and grind anymore. That doesn't mean what it used to mean, but just the usual role of my old job. I was dealing with central banks. So you'd be dealing with the head of the bond desk, and I was starting to go a bit Austrian back then. And I would start chatting. You become friendly with these people. You're dealing with them every day. You chat to them about gold, and they just don't give a toss. I think what gold bugs don't understand, I think most essentially it's not even a space in their head. I mean, I know the Chinese and those guys, they're hardly likely to manipulate it down. We're probably thinking about the Fed and the Western central banks to manipulate it down if there's any agent doing it. They just don't care. They just think it's a laughable crank theory. They really don't care. Like, I don't think we understand how much it's not in their head at all.
Okay.
It's a serious subject.
Yeah, that's interesting. That's really interesting. So a bit
wait till they discover the efficacy of unbacked fiat currency. Then
I've got a question for you about crypto. One thing I find there's a lady called Lynn.
Lynn.
That's right. So I read her book. It's a pretty good book actually. For if you're rather wading through Austrian economics, and she doesn't mention that at all. But reading between the lines, it's clearly she'd be sympathetic that way, and she's quite crypto enthusiast. But so I take her quite seriously. But then she keeps on arguing that these people that talk about how much energy crypto uses don't understand how it uses stranded energy, and it's helping incentivize production of energy in new ways and in poor countries where. So there's probably some truth to that, but that sounds to me quite second order effect. I can't believe that crypto isn't actually net using a shed load of energy. But she will argue, and she seems pretty sensible and knows more than I do for sure about crypto, that it isn't nearly as bad as portrayed. Do either of you have a view or know anything about that?
I have nothing to bring to this table, well, I'm afraid.
It obviously does use a lot of energy. And I think it was used as an argument very early on against it. And it's like one of those things. It's a kind of a post hoc rationalization as to whether it should go up or down. And when people want to talk against it, when I first looked at Bitcoin, when I first heard about it in 2010, it was like so new that I didn't know what to make of it and forgot about it for a long time. And then when it started to gain a bit of traction, the view was, look, if somebody can electronically make money, then everyone could do that. And so therefore it has no value. With a bit more understanding of it, we were seeing in terms of technology, something that was unique and therefore had a place, but whether it would end up being a bubble or not is still open to interpretation. But it does move up and down in a way that can be tracked. But the detractors like Taleb, who was saying that that it's going to go to zero because it needs energy and there's a question I asked Charlie Morris about, because it constantly needs energy to maintain the system. Therefore, it has to go to zero, and which didn't seem like a rational argument, because like the internet needs energy, otherwise you won't well, your banking system needs energy. Otherwise, it's not.
Society needs
exactly.
energy.
So it didn't seem to make sense, even though it needs a lot of energy. Maybe it's quite wasteful in its energy usage, but that's part of what makes it secure. So with certain countries like Iceland, where they have access to energy, where through the underground geysers and the boiling water, where they can convert that into energy, it is possible that because people are industrious, they will look at things and say, okay, let's see how we can convert this into a form of energy, and then we can start mining Bitcoin. But that then leads into the whole energy crisis problem and how that gets managed. And the more you know about it, the more you realize that when they come up with answers like, let's just put out solar panels, the problem isn't the energy generation, it's the energy management. And people sort of bring that as an argument and say it's very wasteful, it's using X amount of energy. Well, if that's the case, then we would see the price of energy change because of the use of Bitcoin within our countries. And we haven't seen any changes. So I could conclude that maybe it's negligible. And if it didn't make sense, and there are times when these render farms end up losing money because the price of Bitcoin goes below a certain level, it's almost a way of making it so people fall out of the system, and then there's less people, so that they can change the algorithms to make it easier to mine Bitcoin, and then people come back in again. So it's almost in itself.
Well, you're touching on something I don't like about Bitcoin. Like, I know there's good and bad arguments. I'm not a negative positive. I don't have any. I think it's a high beta gold, basically. But I don't like the idea. Like, if you have a gold coin in your pocket, there's no one else needs to do anything. That is in your pocket, and as long as you don't tell anybody, you have it forever. But if you have a Bitcoin, it requires an entire system to keep working forever to maintain the value of that thing. And I don't think people realize that relies on an ongoing system to work. And I'm not saying it's going to go wrong, or I'm predicting anything. I just think it's a vulnerability that I can't even. It's like, when things go wrong, I couldn't tell you the O-ring would go wrong in the space shuttle. When it goes wrong, everyone goes, "Oh my God, why didn't they focus on the O-rings?" Like, okay, now you know the flipping tiny piece that was the problem. It's obvious. And I just think that with Bitcoin, there's something like that in the future. I have this sneaky feeling that I'm not saying it's going to happen, but I think we underweight. There are vulnerabilities to someone clever in the future to do something with it that wouldn't be great. I just don't think we wait. Whereas that is just not a risk with gold. I mean, maybe someone can steal your gold, sure. Or maybe in the post-fusion age, I mean, no one talks about this, but if they really do invent fusion or fission, whichever the machine is, they could flip and synthesize gold. And then there's an issue there one day and far in the future, probably.
Yeah. I mean, but what you're talking about there is one or the other, and absolutely right to do that as an investor. And that's the thought process. If you invest in one, you can't invest in another, or how do you split it? But I think you're absolutely right. There is a potential for it to fail at some point, in the same way that currencies can fail at some point. The euro can fail at some point. That is definitely not a zero probability. And what will cause it may be that, it may be something else, but it may also not. So at the moment, I think just to focus on the original question, which was the energy argument, that seems to come in and out as a problem, in the same way that, I guess, money printing is a problem, and it seems to sometimes be a problem and sometimes not, but over time it definitely is a problem. It depends what sort of argument you're trying to maintain. I mean, Taleb said that Bitcoin was too volatile to be a store of value. And then I remembered him seeing something about him saying it was being manipulated. And I was thinking, well, these are really strange arguments when you've seen the Japanese yen collapse the way it has, because currencies, anyone who's in the markets knows that currencies can collapse. And yet you don't say that they are or they're not stores of value. It depends.
I'm glad you engage with Taleb, though, as in think about it, because I'm not being patronizing, because I think if I talk about him to a lot of people, they just say, I can't deal with him because he's so annoying. But it is confusing how, he wrote, he pretty much invented them. He didn't call it midwit. The midwit meme, the one with there's a normal, if you're not come across a midwit meme, it's a great one where there's a normal curve. And it's where people who are geniuses, who will be represented by a Jedi's face on the far right, as in a super high IQ, and then the moron on the left, who's depicted as a caveman. they can tend to agree on some sensible stuff, like eat, don't get fat, do some exercise, lift some weights. So the Jedi would agree with the caveman, but the midwit will go, no, you need to optimize for your autophagy and intermittent fasting and have ice baths and do zone 2 train. Or you get lost in the weeds of the details, like, yeah, but you're missing the big picture. Just you cover the basics and you're going to cover nearly all of it. And I think Talad's one of those guys where in some areas he's really great. In some areas, you just think, how? Like, for example, he's got this thing about IQ where he will, for example, note that IQ is not as reliably measured as height, which is true. To then conclude as though that's a slam dunk against all the IQ racists who are trying to prove racial differences and eugenics. And it's like, hold on, you can believe that intelligence is something that's real and measured by something clumsily like IQ. But to go to the extreme that you nitpick, which is another thing he goes about nitpicking how accurate it is, to then dismissing it as a thing altogether, and that anyone who notices the difference in IQs between different groups is just a eugenicist. It's like, well, that's a huge jump. And by the way, coming from a guy who's clearly got an IQ of over 140, like, it's so bizarre. How he could think that IQ or intelligence isn't some deeply innate property of humans and genetic is bizarre. But so I just can't understand. That's another thing about the intelligence thing. I don't get how bright people can say things that seem to be so obviously wrong.
Yeah, I totally agree. I tweeted to him in the early days of his Twitter, and he sort of liked some of my stuff but I haven't done it for a long time. But it was mainly because I was reading his book and sort of putting some quotes about Fat Tony, because I thought Fat Tony was just a great character, which I thought spoke to the sentiment stuff. He talks about the Gulf War and how everybody said oil was going to go through the roof. And of course, Fat Tony goes, no way, how can the markets go up when everybody's already seen it? So it's a sentiment thing. But then I saw he put something out about actors, and he was saying, it's not really a profession. And I was like, and I sort of had to take issue with that. I said, of course it's a profession, because it's a profession because have you ever seen bad acting, and that tells you that it's a profession. Which
did he block you?
No, actually, I think he liked it, which was strange.
That's impressive.
But that was a few years ago. I haven't really. I've only looked at what he said on the periphery. But funnily enough, I wanted to ask you about him anyway, because I'd seen a maths video that he suddenly put up. So he is coming back into the media in a less aggressive way, perhaps, should we say? But given, I'd like to see a Joe Rogan podcast with him on there. I mean, I'd love to interview him myself, but I think Joe Rogan, he probably wouldn't want to come on a smaller podcast, but going on Joe Rogan, I think would be very interesting, because he would get to the bottom of his, of his bullshit.
Well, never meet your what's the phrase?
Never meet
your idols.
Yeah.
Never meet your heroes.
On energy, one thing I keep thinking about is I saw it years ago. So Toyota has this 1-6-90 rule, which I'm surprised is not more well known. And Toyota, I live in Japan, so I love waving that card, because I do think it does mess with people. Anyone's lived in Japan for a bit, you do come back a little bit changed, because you do see quite a meaningfully different culture than anything like your own. And Toyota has a 1-6-90 rule, and it's on their website. And I'm going to read it too quickly. The amount of raw materials in any one long-range battery vehicle could instead be used to make 6 plug-in hybrids or 90 hybrids. So they've been focusing on hybrids. That's why I looked it up. For the same limited resources, instead of replacing one internal combustion engine vehicle, you can replace 90. The overall carbon reduction of those 90 hybrids over the lifetime is 37 times as much as a single battery vehicle. Now, Toyota aren't exactly political, like some Western companies might be forced to be. And they've been banging on about this for ages. And I don't know why, if that's true, which is they're still developing those hybrids, why that's not being more seriously engaged with. I don't have a good answer for you. But it seems like one of the things that's a scientific fact. So why are we pushing EVs so hard when there are miles better solutions which are available right now?
None of the green or the energy transition stuff makes any sense at all. It's all madness.
Well, I've got a hybrid car, and the problem with the hybrid car is that the batteries are very heavy and they eventually wear out, and then what you end up with is just a heavy car with an engine. And so,
really?
Well, yeah, of course. I mean, look.
Is that not the same with a regular battery car? Are they different kind of? I don't know what I'm talking about with this, but are normal EVs different?
No, they all use lithium-ion batteries. That's the problem. So the big problem with electric cars, there's a documentary called "Who Killed the Electric Car," which I suggest you watch because it was fantastic. The version 1.0 of the electric car used lead-acid batteries. when you start a normal petrol car, that's that big heavy battery in your engine, and that is a powerful battery, but it's extremely heavy. If it wasn't for the technology that we've got at the moment, you wouldn't have the mobile phone in your hand. That uses lithium-ion technology, which is, for its weight, extremely powerful and can deliver huge amounts of power to your phone, your laptop, all these other things all day long, and in a very light weight. So that changed the whole landscape of the potential for electric cars. Now, the problem with these batteries is that they have a number of recycle times before they actually start to become inefficient and then eventually stop working. Anybody who's had a laptop where the battery just won't charge anymore, that's what's happening. It's a recycle. There's a certain amount of recycles that you can get out of any rechargeable battery before its performance starts to go down or indeed goes to zero. So the problem then becomes you've got a load of batteries that aren't very good for anything, and they're sitting in a car after a certain amount of time where they're kind of useless. They need to be replaced. So in cold and hot weather, their efficiency goes up and down. Those two particular extremes are when you're going to put the most stress on the battery. So when it's cold outside, freezing in the winter, you're going to want to put the heating on. Well, that's when the batteries are suffering the most and not able to provide as much power. When it's really hot outside, the batteries are suffering the same thing. But that's when you want to put the air conditioning on, and then it starts to use a lot of power. Now, it's not saying that they can't deal with that, but it reduces its lifespan and reduces its range by a huge amount, which still hasn't been properly solved. So we need a new technology, but absolutely batteries wear out and their efficiency goes down over time. When you get your car, it will be at its maximum efficiency and it will go down from there. And Elon Musk has said that, I know from somebody who's got a Tesla, he was saying that they don't allow you to charge up to 100%, because if you charge it up to 100%, that puts the most wear and tear on the battery. They only allow you to charge it up to 90%. And if you charge it any more, you'll lose your warranty.
So you're saying I should wait before I buy an electric car? I'm one of those guys who didn't get an iPhone until it was an iPhone 4 or 5. Let everyone else practice first, and I'll get it when it's well embedded.
Well, I think for certain, if you're living in London and you're doing short hop journeys, and an electric car can make sense. It just really, really depends on what you need it for.
Well, James May, the trio, one of the trio of Top Gear, he's kind of a witty bloke, and he was saying, you wonder if things have been invented in a different order, what we'd do today. So his example was, if he was going about this, I don't know, that weird felty stuff they had in car seats before they had leather, I think. And he was saying, we now pay premium for leather. He said, but leather's not great. It sticks to your bum, or I don't know what he was saying about leather. And it gets hot and hot weather, and it's not, whereas viscose or whatever that furry stuff is, like your old-fashioned 70s sofa, that's great. It's always comfortable, nice to touch, blah, blah, blah. And he's saying, if it had been the other way around, we would have not favoured leather. And then with electric and gas, if it wasn't for eco stuff, imagine someone said to you, electric cars, what we have, could have queue up for hours only, so it charges slowly. You've got these special plug points. I know it's all going to get more efficient, but still, that's where we are today. If someone said, oh, here's a brand new car, it takes this magical liquid, it takes about a minute to put into your car, and it can do over 1,000 kilometers. You go, oh my God, that's great.
Yeah.
I'll take that, because I filled up in a minute and bang, I'm good for 1,000 Ks. And by the way, these liquid dispensers are all over the country. Every few miles, you go, well, that's obviously the best way to go. I'm not saying we should do that, but it is a bit like, you do wonder. Part of me wonders if you just said no one's allowed bigger than, when I was in Bermuda, I saw they have all these small cars. They have regulations about having either small or old cars, but then no one has fancy cars. You do see in the same Singapore, they limit the number of cars you can have. You do wonder, well, if we said no one can have anything above a 1 litre car, I mean, and you're not allowed to change a car within 10 years or something weird, like if you really meant it about changing the environment and that, I mean, that would be quite cheap, and which is important, because most people who don't have the money can't afford an electric vehicle. So to force them to buy an electric vehicle at a premium above what they can afford is also completely an elitist blind spot to the whole game plan at this stage. Whereas a 1 litre Volkswagen Polo, that's not a big deal. Probably accessible to most people. Does the job.
Well, this
very low output, never breaks down. My son's got one.
Well, yeah, I used to have one, and I think that this I think is what the problem really is. And if you go back to when I was growing up, cars were very unreliable, and they wouldn't start, they would break easily, they would rust, and you'd have all these problems with older cars. And as the technology and the manufacturing got better and better and the Japanese led the way, it was either you buy a Japanese or a German car because they were just fantastic. And then you got to the point where you'd see 300,000 miles on a car. It's like, well, that's incredible. There is whatever reason there is to buy a new car, like if it's a vanity thing, or if you've seen Adam Curtis's Century of the Self and you see how you're being influenced into buying the new and the latest and the greatest thing. But there will be a lot of people who just say, well, my car's great. I really like it. I don't need to change it. And they will last longer and longer. And so, going from like, say, a 4, 5, 6 year cycle where things start to go wrong and people buy a new car, you could go 20 years and they'd still be okay. So this is the thing. So what do you do if people want to hang on to their cars? Well, you've got to move into a new technology to buy a new car, to validate the industry, to make it so that you buy something new. And of course there is the issue of pollution. Okay, so if we put that to one side just for the moment, how do you make people buy a new car? Well, I suppose you force them to by banning the alternatives, making their regulations, like in London, slowly making the older cars, like no matter if it's a good car, so what if it's a good car? You're being forced to buy a new one, and that doesn't seem very green. What seems green to me is taking an existing good car and then converting it to an electric car. If that's what you really want to do, that's what you could do. But, that's not being given as an alternative. You've got to buy a really expensive electric car, for which I still don't understand. I mean, I know a bit about cars because my brother was a mechanic and I used to, as a kid, work on them. And, when you look at the technology, a lot of it is the workings of the internal combustion engine is extremely complex, and there's a lot of moving parts and there's a lot of maintenance and work that needs to be done on it. An electric car is effectively an electric motor and a battery, and there isn't that much more to it. So quite why it has to be so expensive, and I know batteries are expensive, but in terms of its structure, it doesn't make sense other than for taxes or profiteering to make it that expensive. And yes, of course, I think I know that one because I knew a bit about Ivanhoe Mines, and they got Robert Friedlander used to talk about how much rare earth metals and copper and that go into an electric car versus an old. He was comparing it to 1950s Mustang. Okay. I don't remember the number off the top of my head, but it's orders of magnitude higher than a regular car. Like it's I think that's okay. A lot, because I don't think the margins on EVs are that high. But that's the thing. It's not. Yeah, it's not better though, is it? It's different.
Oh yeah, it's different. It's different. Yeah, I think that's fair.
And I wonder whether we will get recycled into. We'll get the electric cars, then we'll get the hydrogen cars, or then we'll get some other form of battery. It's the iPhone thing. It's like, well, there's a new iPhone, we got to buy it, and with cars, we're not doing that. So the system needs to be set up so that we do that. The batteries have got to start.
Well, Russ Roberts on, Econ Talk guy, he has some good guests, and he had a guy on a futurist, but not like he was more of a realistic futurist kind of a guy. And he's saying the end game is probably going to be you have these drone cars rotating around cities. They'll be moving around cities using predictive, like that ChatGPT kind of logic of guessing where traffic is wanted and not needed and all the rest of it. And they'll be hovering around the cities waiting to pick people up and drop them off everywhere. So the idea of you having a 1 or 2 ton piece of metal on your drive, or 2 of them for every household, that is really an efficient use of resources.
Well, how's that going to take you to Germany or to France or to Italy if you want to drive? That I agree that will happen, but this is the problem.
It's 90% of short travel. It'll be just getting. You just have your phone, you tap it, and with these drone cars, you just jump in and jump out like moving escalator almost.
I would say that's. Almost definitely that's where it's going to. Almost definitely. But it doesn't negate the fact that we still need another vehicle for, how are you going to get the family and all the luggage in a small car like that? You're going to need something else.
Oh yeah, but he's not saying it will solve every use case. I mean, you can imagine there'll be a company that you hit a button and they send you a 5-seater one for a longer journey. You pay more for that. I mean, I think his point was his general point was, it's kind of funny how we have every household has all this technology and weight and machinery just sitting there doing nothing for 23 hours a day. But the problem I didn't quite understand with that is, well, people tend to use the cars at the very similar time. So where you're going to get the sudden, everyone can't get, you can't have all the cars at the same time. Everyone demanding the same handful of cars at the same time, and then have a smaller fleet. Anyway, I'm sure there's some solution out there that's cleverer than I am. They will be better than owning a car in every household. That seems obvious.
I wonder where they'd be stored.
The electric scooters and electric buggies are I'm amazed how popular those things are. Like, I don't understand why. Like, I cycle everywhere, but Dublin's kind of small, so it's only 1 or 2 kilometers to get around. But I think there's something electric. You think, well, if you didn't have a bicycle, why would you get an electric bike? But they're huge for that reason. I think people don't have a bicycle, but they will get a scooter or an electric bike. It just seems to bridge the gap from walking to a car in a way that a bicycle for some reason doesn't.
Well, an electric bike allows you to keep up with the 30 mile an hour traffic much better, or 20 mile an hour in London.
Yeah.
So it feels safer, I think. Not that I'd ever cycle in London, because I think it's just too dangerous overall. But I can understand if you've got a car behind you wanting to overtake all the time, it's not going to feel great. But if you've got an electric bike where you can sort of match their speed and the cadence of the road, then I think that makes more sense.
And you don't get sweaty as well, because have you ever ridden one of those things? They kind of are incredible. Like, I don't really know how they move so fast with such a little effort, but you're really not pushing at all.
Yeah, I actually did. I had to go at I sort of signed up for Lime Bike. It was very early in the morning and there was no traffic around. I thought, oh, this could be fun. So I gave it a go, and it was like, whoa, this thing really goes. It was quite a lot of fun, but I wouldn't like to do it in normal traffic.
Should we wrap up with media picks then?
Great idea. Why don't you go for it?
Okay.
Go for it, John.
Well, I was going to mention there's a book. Can I do a book? It's not a media pick.
Yeah, sure.
So there's a chap locally called Lar, and he's written a book called Lawrence Anderson. Sorry, his name is Lawrence Anderson. Lars is called him in real life. And the book is called The Compounder's Element, A Patient Path to Prosperity. And the reason I like this is I was just thinking, normally books you read are people like by Morgan Housel or Michael Mauboussin. They're very good writers. So and they write well, and it's quite sensible. But I think it's probably more useful, really, to listen to people that have. He ran a KKR value fund, or he's one of the fund managers there, and he's grown-up jobs in the investment space, and he's a lovely bloke. And the bit that got me in this book was, it's more about he talks about the vicarious visceral gap, and I highlighted one paragraph, which is the teaser, which if it doesn't work for you, don't buy the book. He said, while there is a wide difference between vicarious and visceral learning, the combination of the two is where practical wisdom is born. The vicarious knows what, the visceral knows how, and together they know why. And I think there's a lot to that, because a lot of people read these investing books and think, I can now be a great investor. It's like, yeah, but having been in that world, that most people just won't do it, or they'll chase, all these things we discussed too much already. And I just think there's something in a book like this by an actual practitioner who's not famous for being a writer first, then a pseudo investor. He's actually come from the other way around. That those are the guys who, it's like Taleb's thing about, would you trust a surgeon who looked a bit scrappy? Remember that one? He said, if you're having a doctor who's perfectly presented, stereotype, white coat, horn-rimmed glasses, pencil in his upper pockets all neatly lined up, or a guy's a bit young guy, all hands and fingers, a bit scruffy looking. He said, for that guy to become a doctor, not looking like the usual kind of a guy is unusual. I'm not saying Lar doesn't look like that usual guy, but you're judging not necessarily on, does he write more beautifully than Morgan Housel, who's got a very good way with words. You're judging based on the fact the guy has got there by a different route, which is usually more interesting. Does that make sense?
Yep.
Okay.
And as a reminder, what's the title of that?
The Compounder's Element.
Brilliant. Tim?
One I'm going to go with is a film I saw a few weeks ago called American Fiction from 2023 with Jeffrey Wright, and probably the best performance of his career. And it's a fantastic satire on race hustling. So Jeffrey Wright plays a black literature professor, and he's so fed up with people writing. I think he comes across a conspicuously sort of upper middle class black young lady who's written a thing called sort of something like "We Lives in the Ghetto." So he decides to write his own. So he sort of takes a sabbatical and he decides to write his own book, which starts off being called My Pathology with an F, and then he decides to up the ante with his publisher, so he just decides to call it Fuck. And it's a bittersweet. So it's a drama and a comedy, but it's called American Fiction.
Okay, definitely going to make that.
It basically nails the whole cult of race hustling. It's very, 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 very funny.
and I've got to go, but I've got to share this with you. I was walking the dog, and I fall in with a couple of Chinese guys there, just walking around, and we're chatting, and then they start up about how, and they're not being provocative, how it's kind of funny, how they're watching TV over here. They're Chinese students at UCD in Dublin, so they're fresh-eyed, English-speaking Chinese students and not aware of our world really at all. And I think it's funny, watching TV here, there's a lot of certain racial groups on TV that are less represented than Chinese and Indians, let's say, who are there's far bigger percentage of them than another group that gets a lot of representation. And they're asking me, why is that? Where do I start? Because I've never thought about it, but it's funny hearing a Chinese person who's not being politically, I don't think they're trying to be smart-ass or anti-woke. They're just saying, what is it with this representation of certain groups completely out of line? And then there are other groups, like, for example, Chinese and Indians, who are underrepresented. Why is that? And I thought, I don't know how to answer you without getting to some awkward territory.
Without getting lynched.
Yeah.
Well, I'm going to pivot mine very quickly to the Matt Walsh film that I'd really like to see, and I haven't seen it. If you haven't heard about it, it's called Am I Racist?
Well, the Times has an article today, Paul, about that movie, and also the new Reagan one, saying how the media is completely being silent on these commercially successful movies.
Yeah.
That obviously there's a demand for, because they have non-liberal messages, I guess. And so it's just funny how commercially they're still getting there somewhere, despite getting zero mainstream coverage.
Slowly have a nugget of hope out there.
Brilliant stuff. Well, let's let you go. Thanks. I always love it when you come on the show. I have such.
Yeah, sorry.
No, it's brilliant.
So, but I'm not getting into a fight with you earlier on. I just have a.
No,
I'm trying to, in my mind, I'm trying to hold the tension between
I love it.
What we do versus the general audience.
I love it.
Because if they start going, oh yeah, I saw an online course to go learn about stochastic signals. Oh, please don't do for most people don't do that. It's not going to end well.
I'm not offended by it one iota. It's exactly what the skepticism that you should have. It's always a pleasure. So, thank you, and look forward to having you back.
And not nice chatting to you.
Thanks, Jonathan.
Bye-bye. Bye, Tim.
Bye.
Bye.
Thanks, everybody. This podcast is for entertainment purposes only. Please do your own research or contact a professional advisor.